All right, let's talk about venture capital. We're not just going to look at it as some niche part of the financial world. We're going to dig into how it's become one of the most powerful and, yeah, broken engines that's actually building our future, and why fixing it matters to every single one of us. Think about this for a second. This is the core idea we're exploring today. It's basically saying that the choices made by a handful of investors in a few boardrooms, well, those choices are literally blueprinting the future for the rest of society. The stakes are incredibly high. So, to really get what's wrong with venture capital today, you first have to understand the story it tells about itself. And, it's a really compelling, almost heroic story. And this is the myth, right? VC is the cool, weird cousin of finance. It's the risk takers, the ones who are supposed to walk into total uncertainty, find those brilliant, non-obvious founders, and fund the kind of wild, world-changing ideas that nobody else will touch. It's supposed to be the oxygen for ambition. A beautiful idea, isn't it? But here's the thing. When you actually listen to the founders, the people in the trenches trying to build these companies, a completely different, much messier picture starts to emerge. In reality, the whole VC machine is just full of contradictions. And wow, this just lays out the disconnect perfectly. The myth is that VCs are these bold explorers out there searching for hidden treasure. But the reality, it feels a lot more like they're just running an expensive search query on the same handful of elite universities, the same big tech alumni networks, and the same couple of zip codes. It's less about discovery and a whole lot more about expensive pattern matching. Now, you'd think, okay, if they're playing it so safe and only betting on these pedigreed teams, the returns must be incredible, right? Well, nope. The data is pretty staggering. A full 85% of VC funds either lose money or just barely break even. So the system isn't just failing to find groundbreaking ideas, it's not even working as a reliable money-making machine. And if you listen to what founders are actually complaining about, you hear the same themes over and over. It's not about being afraid to fail. It's about a system that seems totally allergic to real risk. It's about this obsession with pedigree, the geographic bias, the endless extractive processes. These just aren't the behaviors of an industry that's truly comfortable with the unknown. Which all leads to this massive contradiction, this paradox at the very heart of the industry. We have a whole class of risk capital that seems to have grown to hate risk. And here's the kicker. The really tough, early discovery work, the part that involves genuine risk, that's often pushed onto angel investors or founders just bootstrapping with their own money. Venture capital then kind of swoops in much later after the weird, strange idea has been de-risked and starts to look a lot more familiar. Then they get to claim the success. This behavior creates a huge problem. Let's call it pattern blindness. When the money only flows to founders who look and sound like the last big success story, the whole system goes blind to incredible opportunities happening everywhere else. In less glamorous industries, in different parts of the country, you name it. The conclusion is already decided before the pitch even begins. And let's say you're a founder and you actually manage to get a meeting. What are you met with? This impossible checklist of contradictions. You're told to be fully committed before you have any money, to attack a giant market but stay super focused, be capital efficient but also grow like crazy. This isn't a playbook for innovation. It's a filter designed to screen out anything that doesn't already look like a sure thing. Look, this isn't just about making founders frustrated. This system's obsession with comfort, its avoidance of real risk, it has a real, tangible cost for every single one of us. I mean, just think about the human side of this for a minute. Founders talk about this thing called process cruelty. It's this experience of having weeks, sometimes months, of super enthusiastic meetings, sharing all your sensitive data and your grand vision, only to be met with nothing, just silence. Ghosted. That's not just inefficient. It burns the one thing that actually fuels innovation, trust. So you might be listening to all this and thinking, okay, the system's a mess, but isn't this just, an inside baseball problem for people in Silicon Valley? Why should I really care? The answer? Absolutely not. This is everyone's problem, because this system is literally in the business of deciding which futures get a chance to exist. Let's just pause on this for a second, because this is so important. Venture capital isn't just about moving money around. It's the bridge between a raw idea in someone's head and the actual infrastructure we all use every day. It shapes our apps, our transportation, our healthcare. It helps define what normal life even looks like. So What happens when that system just defaults to funding safe sameness? Another productivity app, instead of a really hard climate tech solution. Well, these are the futures we lose out on. We miss the chance to build tools that could fix our attention spans or community-owned infrastructure. We pass over the hard, slow, unglamorous ideas that could solve real problems in health and food and governance.
Okay, so that's the problem. But look, it's not all doom and gloom. It doesn't have to be this way. The good news is a healthier system is totally possible, and it doesn't require some magic bullet, just a different set of rules.
So what would a better system even look like? Well, here's a pretty simple blueprint. In sourcing, it means actually looking for talent everywhere, not just in the same old elite pipelines. For staging, it means being honest. If you're not really a day zero investor, just don't say you are. In the process, value clarity above all else. A quick, honest no is way more valuable than months of silence. And finally, with structure, tie rewards to actual realized results, not just how much money a fund can gather.
And that really brings us full circle, back to the big idea here. Fixing venture capital isn't just some insider game to make life a little easier for founders. It's a fundamental civic task. It's about taking on the responsibility of building a world that's more innovative, more resilient, and frankly, more humane. So here's where we land. The system that's supposed to be funding our future is kind of having a midlife crisis. It's at a crossroads. The real question isn't just if it can be fixed. The question for all of us is, what kind of future do we actually want it to build? That's the one that really matters.